Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
So 200 रुपए हम लगा रहे हैं, 100 रुपए स्टॉक ए, 100 रुपए स्टॉक बी.
And stock B completely goes down to zero.
Bankrupt, B for bankruptcy बोलते हैं.
And in 5 years, stock A suppose goes to 500.
Right.
Right. Now, even in this scenario, right, 50% of your initial corpus has gone down to zero. In some ways, right?
Wow. So even though the index is compounding long term at 12-13%,
yes,
the majority of stocks in the index are not compounding at 12-13%.
So they are underperforming the.
So interesting. So how exactly does an investor then go and build a diversified portfolio? What are the options available to investors who want to create a portfolio?
Sure. So many working professionals, will not have time, resources, or expertise to directly invest in equities, right? For such folks, investing in managed portfolios like an equity mutual fund is, a better option.
Hi there, my name is Saurabh Mukherjea and it's my pleasure to welcome you to the 5th episode of Guru Mantra with Saurabh. I'm joined by my colleague Krishnan. Both of us work in Marcellus Investment Managers. Krishnan heads the investment advisory vertical. In the preceding episodes, we've discussed about the benefits of long-term equity compounding. We've also discussed the demerits, the disadvantages of lots of trading. In this episode, we'll discuss why an equity investor should build a diversified portfolio rather than punting on this or that stock, right? So Krishnan, when we were growing up, right, our parents taught us don't put all your eggs in one basket. I suppose they were trying to give us the basic tenet, the basic mool siddhant of diversification. Can you explain from an investor's perspective, what is the benefit of a diversified portfolio of stocks? What exactly is a diversified portfolio of stocks in the first place?
So when we say a diversified portfolio of stocks, we are saying at least definitely not a single stock portfolio, but a set of stocks which again can offer, which are fairly uncorrelated and which can provide some buffer to the portfolio. So if one stock is not doing well, right, the other stock can hold up the portfolio, right? It's almost like a ballast, right? So again, going back to this example which you gave, a beautiful example which you gave in one of the earlier podcasts, right? So consider a 2-stock portfolio, right? And you're investing, 100 rupees in both the stocks, right? Okay. And one of the stocks completely goes down to zero.
So 200 रुपए हम लगा रहे हैं, 100 रुपए स्टॉक ए, 100 रुपए स्टॉक बी.
And stock B completely goes down to zero.
Bankrupt, B for bankruptcy बोलते हैं.
And in 5 years, stock A suppose goes to 500.
Right.
Right. Now, even in this scenario, right, 50% of your initial corpus has gone down to zero, in some ways, right? Even in this context, so over a 5-year period, your portfolio would have earned a annualized return of 20%.
Very interesting. हमने 200 रुपए लगाए, 5 साल बाद 500 रुपए मिला.
500.
Even though half the portfolio got wiped out at the outset.
Yes. So what this tells you is, again, the benefit of holding, again, 2 stocks. In this case, stock A has made up for the complete loss of capital in stock B, right? Which is the essence of diversification, right? Now, again, when you look at market commentary, typically what you see is, it runs around, the company's stock price, right? That it's going to surge or, it's going to plummet, right? Or this company is going to do X, Y, Z. So what usually happens is uninitiated investors often get misguided and end up putting all their money in one stock.
Because hype उसी प्रकार का होता है कि आज ये stock चल रहा है. Exactly. Everybody is talking about the stock. लोगों को लगता है ये एक ले लूँ तो मेरी जिंदगी बदल जाए.
Exactly. So they end up putting money in that stock or a very narrow set of stocks, right? And our analysis, based on empirical data, again, this is based on, our analysis, over multiple market cycles, this suggests that this is a very unwise strategy, right? And the reason is, what we have found is majority of stocks, if you take even like a 500 stock universe, the BSE 500, which is, investable universe as such for Indian investors, majority of stocks in this BSE 500 fail to beat the returns of the index, the market cap weighted 500 stock index.
Wow. So even though the index is compounding long term at 12-13%,
yes,
the majority of stocks in the index are not compounding at 12-13%.
So they are underperforming the.
So interesting.
The benchmark, right? So and even though this analysis, you can think about, maybe someone tells us, that this is very specific to Indian stock market. It is not so. Similar studies have been done in other stock markets. So
you're saying only a small minority of the stocks in the market
exactly
drive the entire returns in the
Returns
market.
of
What
the
sort of, when
market.
we're talking small minority, what sort of percentages are we talking about?
So if you look at, for example, the US stock market, the analysis, done, by, again, different studies have shown that only around 4% of the listed companies, right, explain the net gain for the entire US stock market.
So सिर्फ 4% of stocks are driving the entire market का return.
Yes.
बाकी 96% stocks का कोई योगदान नहीं है, return में. Amazing.
And we have found almost similar numbers for India.
Right.
In fact, the numbers are even smaller for India. But again, the 4% number which I gave you is for US stock market.
So BSE 500 के context में अगर देखें, if you apply the 4% rule, basically 20-30 stocks end up driving the BSE 500 return. So therefore, over diversification is also not a good idea. 100-200 stock का portfolio चलाना is also not a good idea. Neither is it a good idea to punt on 1 or 2 stocks.
Exactly.
So how exactly does an investor then go and build a diversified portfolio? What are the options available to investors who want to create a portfolio?
Sure. So many working professionals, will not have time, resources, or expertise to directly invest in equities, right? For such folks, investing in managed portfolios like an equity mutual fund is, a better option. Among mutual funds, obviously, you have a lot of options. You can go for an actively managed mutual fund, or you can go for, a passively or a passive option like an index fund. Which basically follows a market cap weighted, index like a Nifty or a Sensex.
Index fund will invest in the whole market proportionate to their weight in the market.
Exactly. Right. Another option is obviously, you can invest in portfolio management services, and obviously this requires a minimum 50 lakhs minimum investment. Right. A third option is to invest in managed portfolios, through online platforms like Smallcase. Portfolios on these platforms are managed by investment advisors like myself. Or research analysts. For investing in these, you would need a brokerage or a demat account, right? So the Meritor Q offering, which we talked about, advisory offering, which we have from Marcellus, falls in this category. So this, strategy is available on Smallcase. So once you have subscribed to Meritor Q on Smallcase, for example, you can execute the buy and sell order, again through your brokerage account, through your demat account. And since the portfolio, once you buy the portfolio, it resides in your brokerage account. At any point in time, you have complete control over this portfolio, right? So if you want to, tomorrow, maybe realize the proceeds of, again, whatever you have bought, you can do it immediately. Like I said, it's fairly liquid.
So folks, there you have it. Equity investing is a good thing. The last 20 years of data is very clear. The Indian stock market gives you healthy returns in the long run. But you only get those healthy returns if you create a high quality diversified portfolio. Punting on 1 or 2 shares basis some tips or that day's fashion is not going to get you rich. Neither will an over diversified portfolio take you very far. How do you get a high quality diversified portfolio? Krishnan is saying you can go and invest in mutual funds. There are several high quality mutual funds in India. Secondly, portfolio management services providers, PMS firms, also offer ready-made portfolios that you can subscribe to, provided you invest the minimum of 50 lakhs. And the third option Krishnan suggested is portfolios created by investment advisors such as himself, available via platforms such as Smallcase. Meritor Q is the portfolio Krishnan creates for Marcellus' clients. Thank you very much for joining us in this 5th episode of Guru Mantra with Saurabh. In the 6th episode, we will look at what drives long-term compounding, right? And the benefit of high-quality capital allocation and how that drives wealth creation for you. Thank you so much for joining us.